Welcome to another episode of Ask the Experts. I'm Courtney Robbins, attorney with Luckett Land Title, where we guide your clients home. And today we're going to be dispelling myths in the real estate home buying process. And I'm joined with Matt Wilson of Origin Bank. Thanks so much for coming today.
Thank you for having me. I'm excited to be here.
Well, and as always here, we want to show you experts in our own community, and you're right here in Madison.
I am. My office is located on Main Street.
All right, well, let's go ahead and let's jump right in.
Let's do it.
So, myth number one, I have to put 20% down to purchase a home.
Big myth. There are benefits to putting 20% down on a home. However, not everyone can financially afford that, nor would they want to go into their savings account and deplete it by putting 20% down. So there are other financing options out there with lower down payment requirements. For instance, if you are looking in the geographical eligible area for USDA or rural housing, and your household income is within the limits for that particular program, that is 100% financing. You may be eligible for 100% financing. Also, if you or your spouse is a veteran or currently serving in the armed forces, you may be eligible for 100% financing through the VA loan. The FHA loan actually only has a 3.5% down payment requirement. And then also the conventional loan programs also have a 3% down payment and a 5% down payment requirement.
So even conventional.
Even conventional has lower down payment options out there. And the great thing too is, we offer down payment assistance that is administered through Mississippi Home Corporation. We as community lenders are very proud to have that partnership with Mississippi Home Corp and the service they give to our clients, as well as the assistance that they give to our clients to be able to help them with their down payment assistance. Putting 20% down does bypass you having to pay certain fees associated with the loans that I talked about, whether that might be a funding fee, a guarantee fee, the upfront mortgage insurance, or the private mortgage insurance.
Or PMI.
Or PMI.
A lot of people see that or they hear that PMI thrown around.
But the great thing is, some of those fees can be rolled back into the loan.
Oh, that's good.
As well as with the private mortgage insurance, after you pay down your loan and you get to a certain percentage of equity, usually around 20% of equity in your home, that has potential of falling off as well. So yes, again, there are benefits to putting 20% down on a home, but that is by far not your only option out there. There's other really great options out there that have a lower down payment requirement.
Well, I'll give you an example. When my husband and I got married and we moved here for me to go to law school, we actually purchased our first home right before I started law school with the rural housing program, and we didn't have any money to put down. So we were poor. We were just out of college, and I was starting law school, so one income, and we made it work. And that we actually had a great lender talk about the program and get us to where we could purchase our first home right out of college.
Right.
So that's again an example of that, dispelling that myth. Okay, number two. It is cheaper to rent than to buy. We hear it a lot.
We do. And
not in Madison County.
Actually, a lot of studies show that in the market and in a lot of other areas that rent prices are going up faster than mortgage prices. And, that's the reason that we see when we have a client come in, their mortgage payment is very comparable to what they are paying in rent. And if not, sometimes we've seen it even be cheaper. When you buy a house, you are making that payment, and part of that payment is going to principal interest on the home. So you're paying down the loan, as well as any improvements that you might do to the house or to the home, as well as any type of appreciation. You are steadily building net equity, which can be an asset for you. If you are renting, you're paying a landlord. You pay rent and you don't have that option of building the net equity as if you are owning your own home. Something to keep in mind though, if you're going to purchase a house, you're responsible for more than just the mortgage payment.
That's right.
You're responsible for the maintenance as well. So if you have that leaky faucet or if the air conditioner needs to be serviced, it's not as simple as picking up the phone and calling the landlord and requesting it to be done. that maintenance falls on you. So that's just something to keep in mind when you're thinking about purchasing a home. But in many cases, purchasing a home far outweighs renting.
Well, and like you said, I mean, you are going to have to pay if your air conditioner goes out, but you've already dispelled that first myth that a lot of people, when they're on the fence of renting versus buying, they worry about that down payment.
Right.
So we've gone through 2. Number 3, I have to be employed for at least 2 years. Talk about that.
Having a 2-year employment history on the same job is a component of getting approved for a mortgage. However, there are certain situations where that's not necessary. For instance, if you are currently in college, or if you've been in college and working on a degree or working on some type of certification, we may be able to use that college time as your 2-year work history.
Okay.
If you recently changed jobs but still have a 2-year work history, but you haven't currently been on that job for 2 years, then we may be able to use your past work history as your 2-year work history. It's really an individual case-by-case situation, and called by the loan officer. So that's just one of those things that when you start the initial process, that you just get with your loan officer and let them know and see how y'all will be able to work that out.
One of the things too, be upfront and honest.
Yes.
Throughout the entire process. I mean, we don't want anything to come up, and we've had it come up at the closing table before. And so, like, you got married in the last 2 weeks, and that'll be for another episode. And that's, again, you just changed jobs. And an example, and let's use me as an example. I was an attorney at another law firm, and then I came to work here for Luckett Land Title. Let's use that as an example. Mm-hmm. I'm still in the same profession, but I just moved to a different job to maybe make more money or have, more time off or better myself in some way, shape, or form. That would be, again, on that case-by-case basis.
Yeah, it'll be a case-by-case, but, that happens a lot with, attorneys, nurses. They go to a lot of different hospitals, but because
they'll make more money, or they might have better hours.
Right.
Yes.
So again, we're going to do everything that we can to be able to provide a 2-year work history. So again, that just goes back to what you said earlier. It's just be as honest as possible up front, because we are going to verify everything on the application. So if the more we know up front, the better that we can structure the loan.
Well, and again, you know who you're dealing with, and that leads me, and I'm going to skip down to number 5, and we're going to come back to number 4.
Okay.
I can use anyone on the internet to get a mortgage. I watch HGTV a lot, and I see that, Quicken Loans or Rocket Mortgage or something like that. Local doesn't make a difference. And we were just talking about, being upfront and honest. Talk a little bit about having that relationship locally.
Well, there are a lot of financing options out there, both on the internet and locally. In my opinion, it's always best to deal with a local lender. There's many reasons, internet companies will always kind of try to beat you with the teaser rate, or will try to entice you with the teaser rate. So you really have to compare apples to apples when it comes from local lenders to internet mortgage lenders. People think they can get a lower interest rate on the internet, and a lot of times that's not true. They think they can get lower fees on the internet. A lot of times that's not true.
Or it's a simpler process, which we'll get to in just a minute too. Yes.
What someone really needs to do is just do their due diligence and compare apples to apples with internet options compared to a local lender. Another benefit of having a local lender is being a local lender, we know the community that we lend in. We're part of the community. There are certain things about the local markets that internet companies might not know of. For example, here in the Jackson Tri-County area, there's a lot of leasehold properties, either with the 16th section land that is administered through the school district, or Pearl River Water Valley Authority. As a local lender, we know how we deal with that all the time, so we know how to continue to get the loan done and to the closing.
Well, and make sure all of the right steps.
Right, all the right steps are done
in the timely manner, so you'll close on time. I'm always worried about closing on time.
Everybody's always worried about closing on time. But again, that's something that is not unique to us. We know about it. We've been dealing with it for years in this area. But if you go with the internet option, then that might be something that they just have never heard of. So again, using a local lender, because we're part of the community, just kind of simplifies things. But I think the biggest reason to go with a local lender is accessibility. You really need to be able to go into that local lender's office and sit down and ask questions, look at your options, talk through the process with them. Any type of business that you might need to take care of with your during the loan process, that really should be that really can and should be important to the home buyer. Having a local lender just puts more of a personal touch on the process.
Agreed.
That again just typically ends up in a smoother closing.
I agree. No, and that kind of leads us to talking about having that accessibility. A lot of times, and we hear this a lot in our office, the process is too complicated.
Mm-hmm.
Let's talk about that.
Yeah, to be honest with you, I can see at first how the process can seem too complicated and overwhelming because there is
a lot of steps.
Yeah, there's reports that have to be ordered. There's appraisals that have to be done. There's financial documents that have to be obtained and analyzed.
You have to get blood. No, I'm just kidding. I'm just kidding. You don't have to get blood.
Not yet. Or not always. But yeah, there's a lot of steps to the process. But keep in mind that everybody goes through that process. Everybody buying a house goes through the same process. But buying a house really should be an exciting time. For a couple reasons. One is it's probably going to be one of your biggest financial assets that you buy or you invest in. And the second is a lot of times it signifies a new chapter in somebody's life, whether it's buying your first home, whether it's buying your first home with your spouse, buying a home or the step-up home because you're having to accommodate for a growing family, buying the ultimate dream house, or buying the retirement home.
Yeah, downsizing a little bit, buying a garden home.
Yeah, exactly. With no yard.
We see those.
With no yard and easy maintenance.
That's right.
Those are all exciting times in people's lives. So purchasing that house should also be exciting.
It should be a celebration.
Absolutely. The key is to get reliable and respected experts around you. They will help you during the process. They will guide you through the process, and they will make sure that if there's any obstacles that occur, will help you get through that. That's where finding a licensed, trusted, professional mortgage loan officer, closing attorney, and realtor is extremely important.
It is. It makes a huge difference.
It makes a huge difference. Once you have that team around you and you utilize that team is going to do everything they can to make sure that you get to a smooth and successful closing.
Well, and we talked about, being upfront and honest at the beginning, but throughout the process, having your expert, your team together and relying on them, calling us and asking us questions, we're open to that. I would rather you, because I know that's what you pay us to do. And we were joking earlier that don't call me on the lender questions. No, don't call me on the lender questions.
Don't call me on the closing attorney questions.
That's right. But call us if you have those specific questions to where our areas of expertise, so that we can help you. And shameless plug here, but we actually have a closing guide that's free that you can get at landclosings.com, and it actually has this little map that takes you throughout the entire closing process. But it actually also has a glossary, and so sometimes we throw around things like PMI, or when you get to your closing and we're talking about your deed and we're saying something about how you hold the property, and they're like, what are you talking about? What does that mean? There's a glossary in the closing guide that you can pull out just like you're in school again, and it actually not only has the map that you can actually see where you're at or what other steps have to be accomplished before we get to, we want to hear about the clear to close. That's what you always want to hear. We're clear to close. Mm-hmm. But it also has some insight on the other just little pieces, such as what is a closing disclosure.
Right.
And in the last 2 years, our industry language, and really our industry itself has kind of evolved and changed due to regulations that have come down.
Right.
So again, that's what we created. Again, it's landclosings.com, so that you can kind of be guided through the experience, and that's what we want to do. We want to partner with others, and at Lucky Land Title, we want to help guide you or guide your clients home. That's at the end of the day, we want to celebrate with you. And one of the things that we have here, and you've seen it if you've seen the blogs, we have a selfie wall. So once you signed your signature around an average of 89 times, it is true, then you can celebrate, and we'll even give you a happy, and we want to send you off into the sunset in your new season of life. But we can't do that without lenders like Matt lending you the money so that we can get to the table. And so thank you so much for dispelling those myths. Yeah, and if you have any questions, what Matt and I talked about, if you have any questions for Matt on those lending questions, then we will link his information so that you can get to him. If you have any questions or would like to have questions answered on another episode, then you can go to landclosings.com, click on the contact us, and just write, hey, I have a question about this, or I have a question, that y'all didn't cover, and maybe we can have you back to answer another question.
Love to, anytime.
And then, finally, if you are an expert, or think you are, and you want to be on an Ask the Expert episode, then please get in contact with us always, on Facebook, or you can go to landclosings.com. You can find us and let us know, because what we want to do is, again, showcase experts in our real estate industry right here in our community. As always, don't forget to request a Luckett location on your next real estate contract. Until next time, thank you.